right after your entry or gives a small push into your direction and then takes you out before continuing towards your expected direction. From execution point of view, this is the last type of thing that you want to see to catch those continuation plays. In this one, I will answer one of the main questions that you guys often ask me. What structures we can trust on the execution timeframes when we have a clear daily timeframe direction, or we are even, let's say, trading towards a clear lower timeframe liquidity pool. We don't have a daily direction, but we still have lower timeframes and execution timeframes on our side, time of the day on our side. Which execution structures we can trust, where our attention needs to go, and what dealing ranges are actually not going to break. So this one is not going to be a long one. I will make it as quick as possible and mention the most important details that you must know for yourself and pay attention to every time you analyze charts on the execution timeframes. So what we have here on the left, imagine that this is a daily timeframe candle. What we see in the morning price after the New York midnight open and after the Asia range consolidating and starting to pull back, price forms this wick and low of the day right here. In other words, what we are seeing is the same old accumulation, manipulation phase and distribution phase right here. So during manipulation phase, ideally we want to see price form the low of the day during London Killzone, ideally early window between 3 a.m. and 4 a.m. Again, you're talking about the New York time zone. But now focusing on the execution timeframes, most of you guys already know that ideally we always look for a London Killzone low of the day and New York Killzone to give a continuation. But now which structures, once the London Killzone low is formed, which structures we can fully trust? Now those of you who've been following me for quite some time, you guys know that what comes to the London Killzone low, I mostly pay attention to when the low is forming. If it's forming very early in the London Killzone or even before the London Killzone, I'm very wary. I'm not fully 100% sure about this. This is exactly why I'm not trading this first pullback. I'm waiting for more. I'm waiting for order flow to take place and stuff like that. I'm not fully convinced with this low. The ideal type of formations that I want to see, the ideal type of developments, what comes to the London Killzone is price trading and retracing while inside of this manipulation phase, running into the lower timeframe bullish PD rate. So let's say right here we have bullish 1 hour overlapping 15-minute fair value gap right here. Price is forming this low during the early window, so ideally right in the middle of the London Killzone right here, and then gives a sharp move to the upside. So everything comes down to details whether I'm going to trade this first pullback or not. If we are trading with a daily stage, we are expecting for a PO3 classic buy day to take place, London Killzone low of the day near Killzone continuation. This is when we have full picture nicely in place, low forming, low being sharp, running sell side liquidity, the whole manipulation phase is clear, price forming this wig here on the daily time frame candle and stars pushing to the upside, taking out a high clearly, pulling back inside of this first expansion right here. We have clear bullish beta raise. This is obviously when we can take our longs right here, but this is the most aggressive type of an entry, and this is not what this whole lesson is based on. The main structure that I want to highlight will be taking place right here on the New York Killzone, but quickly touching on the London Killzone. When a lot of traders enter too early, let's say when price is still pulling back towards a key lower time frame beta rate, or it's still early in the London Killzone, they got trapped a lot of the time and take 1-2 losses before the trade actually happens. This is why you must be patient, and if you are not sure, it's not the end of the world. You can simply skip the London Killzone until it actually starts giving you order flow right here. When price actually starts climbing into your clear expected direction on the execution timeframes, this is when you can jump on board without picking bottoms and playing guessing games right here. And even if you do, often what I personally do, entering right here with my aggressive type of an entry, I leave some space right here in order price will mess around even more before exploding to the upside right here. Because picking bottoms, no matter if you are a magician, technical science guy and stuff like that, it's pretty hard to maintain a high win rate doing this. This is exactly why we very often wait for order flow first. So now everything's clear with the London Killzone, but now what comes to the New York Killzone right here? This is the formation, this is the key puzzle piece that a lot of traders are missing, them trying to look for continuation moves. So one thing that I always talk about, when price, let's say, is building these type of round formations, when price is leaving lows that are suspicious, but say it's pushing higher, leaving these type of situations, not sharp type of lows where we can look for price to continue from here, but it's giving these round type of not without clear structures. This is where a lot of traders just simply trying to catch that continuation too early, being too aggressive with their trades, get caught before the trade actually continues. And there's really nothing more annoying than being stopped out from a position where you nailed the direction, where you had your daily prediction on point, where you knew exactly what's going to take place, but you just simply end up with one or two losses that day, while the whole development ends up playing out to absolute perfection. So for you to not end up in this type of position, one thing that mostly happens in the second half of the London lunch. London lunch again is the end of London Killzone, which is 5 a.m. to 7 a.m. New York time zone. So this is where very often in this type of area, then the London lunch starts, and in the first half of the New York Killzone, prices often leave in structures that you can't fully trust. But now, how do we know when we have a clear execution time frame, dealing range that we can trust? So a lot of traders, as mentioned, looking for continuations. Let's see, in this case, we are seeing these round formations right here that form during London lunch, and as soon as price enters the New York Killzone, they start looking for continuations with their stop loss covering most recent low right here, looking for price to keep on pushing higher. But in most cases, this happens right here. Price ends up either fully stopping you out right after your entry, or gives a small push into your direction and then takes you out before continuing towards your expected direction. So now one thing to keep in mind is that, again, usually main strong structures form around the mid of the kill zone. And what comes to the second half of the kill zone, this is usually when the high probability opportunities are born. But talking about the dealing range that you can actually trust, when price ends up writing some sell side liquidity, ideally also running some short-term buy side liquidity as well, because it makes this a strong type of a high, and we want that. Price running some buy side liquidity, then dropping lower, usually running what happened in the first half of the New York kill zone right here, and sometimes what happened in the London lunch right here as well. So it runs some buy side liquidity, then it runs some sell side liquidity. On the left right here, we often have on the 15-minute or 5-minute some overlapping PDRAs like inverse fair value gap and stuff like that, an old BPR that been a very sensitive area, let's say giving a bearish reaction here, some bullish reaction here, and then price after running some buy side liquidity, sell side liquidity into this area. We still don't do absolutely anything. We don't touch our charts all the way up until price ends up running this high again. From this point now, what we have is a clear dealing range. We can't trust this low because it formed at a good time of the day. It ran sell side liquidity that formed in the first half of the New York kill zone, and or structure that happened during London lunch. Ideally, obviously, it's sharp enough that it runs all of these sell side liquidity pulls were here, and then it explodes the upside with clear momentum, taking out the high again and starts pulling back. This is when we want to start being long from this point right here. This is where the most strong opportunities are born. This is the dealing range that you can trust, and this is actually now the low that you can fully cover and trust with your stop loss pushing towards your main draw on liquidity from that point. So now once this formation takes place, this low to this high right here is your dealing range that you can trust. Focusing on the discount and the bullish PD race from this level right here, from this expansion, this is where you can base your entries on, focusing on OTs, fair value gaps, and everything else, looking for a high probability continuation towards your targets. So now this is theory. Let's now quickly go to the execution time frame developments right here, and let me give you some examples of what I was talking about. So now again, we are not going to focus on lower time frames, higher time frames right here. We covered everything when we were talking about the actual foundations, but now talking about structures that you can and want to trade away from using the replay tool. Now when the price is climbing, and now again, we are not talking about time of the day and all that, we are strictly talking about this execution time frame structure, then price creates an actual high probability dealing range where we can start looking for continuations. So now going forward, what a lot of traders do in cases like this, now notice that price gave this continuation higher, showed a clear willingness to push to the upside, and what we have right here is a bullish order block, right? But in reality, can we really trust this type of formation right here? Not really. This is again something that I was talking about before. When price is climbing like that, giving these round formations, giving these round structures right here, these are liquidity pools that we don't want to trust. What we want is price crashing lower, taking sell side liquidity after ideally taking some buy side liquidity as well, and from that point giving another continuation, taking out that high, and this is where we have ourselves a clear high probability dealing range, exactly what we talked about before. So in this case, we wouldn't be looking for continuations, because if you would be looking for continuations from this point, from this order block covering with your stop loss this low right here, you would get stopped out more often than not. And and notice what happens. As mentioned, price wants to run sell-side liquidity. Also, it ran some short-term buy-side liquidity as well. So this is the ideal type of formation. This is what I personally look for most of the time when I'm looking for continuations, when I already trust, let's say, the bottom and where we are trading towards. So this is where most of the traders would have taken an unnecessary loss, but us, we would be looking for this high to get taken out before we actually look for continuations. So we wait right here and notice how nicely price starts rushing higher. And another thing that you want to pay attention to is where this low formed right here. If you would focus, this is long on Killzone right here. Notice that right here, from 3 a.m. to 4 a.m., we have RT window. So this low right here formed during the RT window, which is from 3 a.m. to 4 a.m. This is where we want to see our reversals or strong structures, strong dealing ranges take place. So when we see that, this is absolute perfection. So from this point, once this low is formed, we are not doing anything. We are still waiting to see if this high is going to be taken out or not. All right, so now you can see that this high just got taken out. And what we have ourselves now is a strong, high probability dealing range. So now notice what we just had. Price keeps on building these low resistance structures. It ends up running the buy side liquidity right here. Then it drops lower, runs the sell side liquidity right here. Ideally, when it happens into bullish beta race, so we can see that we had this tiny bullish fair value gap right here, but that it really matters a lot, but still is great when we have some additional confluence factors. So price runs some sell side liquidity, and from this point right here, during our key window, we start focusing on this strong structure right here. And this is when we want to see price take out this high right here, from where we would start focusing on a high probability dealing range that we just talked about right here. This blue rectangle being our discount area. So notice what happens. Price retraces right into this discount area. It takes some time for price to push towards your targets from here, but as mentioned, this low, if you cover it with your stop loss, you will be good most of the time. So focusing on the OT, the most simple type of an entry, let's say from this low body of the candle to this high right here, OT, you can see that it was tagged with this first entry, with this first pullback into the discount, with our stop loss, obviously covering this strong low that you just talked about, and we are aiming for a main drawing liquidity, whatever it is right here. Notice how price, no matter of how messy this whole structure was, of how price was not willing to push towards your targets right away. Notice how this discount and this OT zone right here, this OT from 0.62 Fibonacci to 0.79, notice how it kept on acting as the main strong area that price rejected a few times, one time, two times, third time, fourth time, and it took off. So with your stop loss covering this main strong structure right here, identifying these actual high probability dealing ranges, this is how you can catch trades no matter if they take off to your target right away or they mess around for a little bit before taking off. This is how you come out and find these high probability positions. Again, I must mention that everything comes down to daily direction, having clear drawn liquidity, lower time frames being on your side. Then you have all of those other puzzle pieces in place. From execution point of view, this is the last type of thing that you want to see to catch those continuation plays. So I hope it was insightful. I hope you took away some value, and we will talk soon. Take care, guys.